Hey there, everybody. Welcome back to 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I am your host, Dr. Michael LoPiano. Welcome back. It's Friday. It's the end of the week. We might be looking at a nice reprieve from this basically constant downward stream of pain for pretty much the entire last month, right? Like, it's been very interesting. I was talking about this actually with somebody last night, and the idea that, like, man, even kind of like that first phase, right? We fell off that cliff on GameStop back on, January 14th, but then, we ran back around February 13th, all the way back for a bit to 31. Like, didn't really feel like we were that far dislodged, even though we had some low lows there in early February. But then to just go from, say, that run up to 3166 on February 14th, or after hours February 13th, to have that, and then just every single day since has been lower. And even when we get recoveries, it's by like 20 cents. We have a bullish like 20-cent close or something like that. So really interesting, and sort of kind of frustrating to just look at it and be like, man, in 3 weeks, like, it took us forever to get back up there into the 30s, and just like in 3 weeks we give up all that ground. Like, what is going on? So it definitely can be a bit frustrating, right? But important to kind of zoom out and think about sort of our broader context here, and maybe as well how that broader context is going to have some effects on our price action today, which we'll get into, as well as some other things that have popped up interesting that we'll remark on. We'll try to be brief. I'll try to be brief with it today, not take up too much time. But we'll have an opportunity later today to break this down in our weekly live stream, which is going to be at 4 p.m. Eastern time. We're moving the weekly live streams back to 4 p.m. Eastern time. And as I promised, this week we're going to do, just thinking about earnings, thinking about some of the things GameStop's been involved in over the past couple quarters. We're gonna do some live investigations of the PSA app, the new PSA app that Larry was checking out. Larry Chang was checking out a couple weeks ago, and we'll see how this works with respect to my own some of my own Pokemon card collection. So I am here in Connecticut, by my near my family. So got my 1998 Pokemon card collection sitting in a box in the basement. So we're going to break that out and have some fun there as well with the live stream this week, in order to look at some charts. Right, we got to break up just looking at the charts. We love looking at the charts, but we'll spend some time with that as well. But let's get into what we might be looking at today a bit. I'll break down what I'm looking at. Before we do that, always time for some gratitude. So today's newsletter brought to you by user S. Schmitty over on Reddit. Not sure about a Twitter handle, but S. Schmitty. S. Schmitty has been a monthly contributor for the past 3 months, treating me to one coffee per month. So very, very thankful for Schmitty. Schmitty, thank you so much for your support, my friend, and for today's coffee. Thanks as well go out, as always, to Dat Scruffdo and Ken Wenmerland, who generously every month offset a little bit of my, well, more than a little bit, but some of my data expenses that I incur to be able to take a look at, put these breakdowns together. So many thanks go out to them, as well to everybody who has supported in the past, who has a shout out and a thanks coming up. So thank you very much. Much appreciated on that front, right? You guys help me keep all of this unmonetized and available for everybody. So yeah, going into today, basically, right, yesterday we talked about seeing some of these signs, seeing these technical signals. We saw on our daily, right, we saw GameStop's daily RSI hit a low that we haven't seen since April of 2024. Definitely strong case for a reversal signal there. We saw options, right? Options looking kind of decent, good potential for some move to the upside, looking a lot like we looked back on the 29th of August. Looking as well, right? The price archetype this past Wednesday looked identical in many ways to what we saw on August 28th. So potentially looking like we're seeing the sort of price action that suggests maybe we are coming out of, right, especially as a number of users have talked about, Richard Newton foremost among them, that we are coming out of this swap roll period, right? What can I make today has also talked about that this week. The Ultimator 5 has been working on a number of indicators to track swaps and swap rolls. Some really interesting synergy between what everybody's been talking about there, especially between what Richard's been talking about and Ultimator's indicators. So really, really interesting to look at that. And that these lows, these kind of inexplicable lows, we've talked about these in terms of volatility cycles, in terms of how market makers, dealers, institutions use these opportunities to generate outsized returns from the options market. But what else is going on there? That next level, that next layer in the background does in fact seem to be swaps, right? We've known this for a while, but having the dates pinned down and how they will move the price into these major expiries, into these potential roll dates, is a big step forward. So basically what seems to be suggested here is we did get, there were a number of swaps that were coming due this week. The biggest, of course, was Credit Suisse's re-up of the Huang Archegos swaps back from 2021 before the fund went bankrupt. So looking at some of that, right, looked like we were heading into some reversal. Looked early yesterday, promising like we were going to get some of that. Didn't end up going that way for the whole day, although we did close only a few cents below where we closed on Wednesday. And sure enough, pre-market here, as we start to move up, we get a report from Benzinga saying like, an analyst who's prominent is seeing reversal signals. GameStop's now a buy, right? Something like that. Obviously, whenever I see stuff like this, I'm immediately like, wait a second, I thought it was a buy, but why do you say it's a buy, right? I immediately start to think down that track. And, we have noticed a bit in the past, a lot of these news reports, especially stuff that comes out of Benzinga, sometimes it's just blatantly the opposite of what's going on. It's a narrative that's meant to fool. We know that this is how mainstream media works. But, right, they can't do everything maybe completely wrong all the time, or they lose credibility. So they have to, trickle in a little bit that seems plausible in order to keep that credibility up. So what would seem likely to me, we're still expecting a couple things down the road, sort of big picture here. We still have earnings coming up. We don't know when those are going to be. Interesting. We didn't get an announcement this week from the company about when earnings is officially going to be. So we see that the 25th is still there as the estimated date on our charts and on our schedules and stuff like that. The company has not yet confirmed that, and they usually confirm the earnings release date 2 weeks ahead of time. This makes me suspect that perhaps we're not going to get that earnings release on the 25th. We'll have to see. Once we do get that official announcement, as I've mentioned, I expect IV appreciation is going to start to ramp up a bit more drastically than what we've seen. But there may be a little bit of uncertainty there that's been worked into some of our IV dynamics over the past couple days. But I would expect, because we also have, right, Richard's been pointing this out, and this is available in the swap data that users like Always Said But Truthful and Matsy have been looking at. We do have some more swaps that are coming up at the end of the month. Richard's been talking about the 28th, especially as a big date. We do see that in the swap data as a day that there's a lot of notional swap value coming due. It seems likely that there is going to be another big roll date at the end of the month, though we do have a few weeks before that actually takes place. So what could this mean? This may be something like a brief reprieve. This may be something like a 1 to 2 week kind of mild recovery before things kind of get slammed back down again. It looks like a double bottom kind of pattern, and then maybe we get into something that's a bit more of an upcycle heading into April, May, June, right? June has really interesting. If you go back basically to 2019, every single June has resulted in a major upward volatility move for GameStop. Doesn't matter, right? Short term could be just a couple weeks. Doesn't necessarily have to be as big of a magnitude of a move like we saw with Roaring Kitty's return to X and to Reddit, last year. But it's always some kind of move like that. So there's something cyclical happening there. So good to keep that kind of big picture in mind. We'll take a look at what some of our more local data is looking at. But of course, I want to point out, and this is the subject also um, of today's title, right? Is 69 to 96. We still have this mystery buyer who's dangling these meme numbers for us. We'll come back to our broader market analytics in a second, but I want to point this out. Right, we get below here, we get 2096, we get another single share overnight exto. I think this is maybe the 15th of these trades that we've seen. Not last night, but the night before, we saw a 2420, so 420 coming through, right? Usually all 69. We did see I thought it was somebody said, I think this was Paul Branham said it was 3471. I thought it was 3469, but maybe it's 3471, right? 741. But in any case, I thought it was 69. I'll have to double check that. Actually, if we go take a look now, what is it that we have? Yeah, it's 3569. They've all been 69. All of them have been 69 since that first one we saw way back. Yeah. It's 3569. 3569. All the way, they've all been 69. 69. All of them have been 69. All the way until now, 2 days ago, where we had 2420, so 420. Part of the suggestion there was, okay, we saw 69, right? 109 to 420. Maybe that's a signal that we're transitioning out of this maybe cyclical period. And now we see 96. So is this a flip mode suggestion? Something of the sort. We are starting to trade up pre-market now. GameStop has appreciated a bit, not crazy, but we've open to the. Looks like we're going to open decently to the upside, maybe about 1.5%. Not too bad. What I think is going to be contingent here, what's really important, as we've seen, is seeing how this times up with what's happening in our broader market. GameStop especially has been doing this kind of diagonal move down, in part because, hey, that's also what we're doing over in the broader market. The broader market has just been selling straight off for 3 weeks with no reprieve. Maybe like a day or two of kind of hanging out when we hit a major technical level, but then just falling through this. Very little reprieve here. We've been talking about this basic kind of momentum pattern over on the weekly chart is looking a lot like what we looked like heading into 2022, 2023. So that last bear market that we saw, this has been a bit more of a steeper decline than we saw back back in 2022. That started earlier. We saw some weakness basically around the same time, but then we moved back up for a double top in February of this year, and then really sharply started to move down. That is showing, I'll point this out, right? The Altimeter 5 has a number of different indicators. Bottom finder he's been using that also works on SPY, seems to work on SPY, as he's pointed out, is showing the strongest bottom signal on the daily chart of SPY that we have seen since 2012. I know this is early in the works, but just an interesting thing to keep in mind there. Things overall in terms of, comparing what we looked like back in 2022, just before OPEX, right? So just before March OPEX, the week before and then the week after March OPEX, we got a really strong reversal and recovery, basically coming out of this long period of decline out of the January top back in 2022. So there's something about this period. There's something about this kind of first quarter is often something of a cycle down. There is often some weakness there. We saw weakness, for example, as well. Well, we saw some bullishness in 2024. We saw weakness around this time of year in 2024. But it may be that we get some recovery into these next couple weeks. Nothing technical suggests that we would see this at this point. I think really our next technical or historical support level is down around 525, 530. Our next technical level is really around 510. And I would expect us in good time to continue our trajectory down that way. But we haven't seen anything of a snapback really yeah, it's been pretty much a whole month. This is our fourth big red week on SPY. So I could see something, a kind of smaller, shorter term sort of flip back over the course of a week, basically up to this intersection here of of the 20-day moving average and the 200, or something over the course of 2 weeks, basically aiming for the intersection of the 50-day moving average and the 200-day, and then before resuming its trajectory down. So what could cause that? What, beyond just kind of, oh, look, charts, lines, we like those. I would say we have so much, and I've pointed this out, we have so much put gex. A majority of our put gex expires here in 7 days on March OPEX. 50.63% of the total market maker net put gamma exposure is concentrated on the 21st of March. Now, what we saw, remember back, if you go back to our videos and our discussions back in February, we saw this coming. We saw the momentum indicators pointing out, hey, it looks like we're in for some bearishness coming up pretty soon. What it looked like, however, was very March localized. That did not look exactly to be the case heading into February 28th, our last weekly expiry in February. Although, nor did it actually in February OPEX. So if we look at this trend, let's hop back a bit. Yeah, we started on February OPEX. It didn't look like February OPEX was actually still more call gamma dominant. And it didn't look like we were heading for like a volatility trigger breach into that. But basically, it did into the last week of February, and then, of course, into March OPEX, which we haven't reached yet. But it looked like what happened at that time was traders saw this coming, major institutions saw this coming, and then before we moved out of that, just like way back in January, before we moved out into March, or out of, I should say, January OPEX, we had a trigger pull on the GameStop sort of fall off a cliff. Same thing happened here. Before we really moved into that super sensitive, more heavily put dominant territory over on SPY, before we moved out of that call stability territory, institutions pulled the trigger. It looks early, so just jumped what looked like it was coming. So we have Bank of Japan next week, midweek. We have then this huge put expiry thereafter. What might happen is today we might see, pull the trigger on an early recovery, kind of force traders to start leaping out of puts, which would then carry us up in a volatile way and then allow those same institutions to take cash that they've now moved out of put positions and then move back into put positions, reposition for, say, something like April for a continuation of this trend. So we'll have to see what that looks like. I think that's a strong possibility heading into today, but we could also just continue our trajectory down and then really not see that kind of reversal until after we get the news from Bank of Japan, or we could see it in a couple phases. I won't speculate too much, but that's basically where my head is on this kind of thing, just to kind of keep you guys in the loop there on what I'm looking at and why that's influencing my decision on thinking about what might happen here with respect to GameStop today. I think if we do see that very strong recovery, or even something stable, we're looking at a bit of a recovery day in GameStop. So like I said, we're already seeing that here in our pre-market price action. Not really any notable shorting today. It was, or yesterday, it was still localized to ETF activity, it looks like. We did have a pretty bullish options day. This is our first bullish skewed options day in weeks. And what was notable was for most of the day, it stayed very strongly skewed bullish. It evened out throughout the day in terms of premium. But a lot of that also looks like it has to do with the fact that, basically in the short term, we've got traders closing puts, a lot of puts closed, and some bullish call trades, a lot of bullish OI. not a crazy amount, but bullish trades near the money, $22, $23. Looks to have been open. So I'm probably not the only one out there that went ahead and saw that, oh, hey, we've got greater than 99.6% of our calls are out of the money. The probability that will, right, it's well below max pain, which is now down to 23. The probability that the $22 calls will expire out of the money is effectively zero, right? AI calculated we saw that way back in August, just before a really big recovery on the 29th and the 30th into, what would that be, September 2nd, right? We actually had about we had about a $3.50 to $4 move in GameStop, a 25% move in GameStop across those 3 days. The last time that we saw a ratio like that. Now, broader market conditions different, not necessarily saying we're going to see that same degree of recovery, but still decent chance to I can see why traders would look at the 22s, look at the 23s and say, hey, pretty good chance tomorrow we see a decent size recovery where this is going to be a profitable trade. So, I'll give a go, right? These aren't massive trades, but they're making sense. And we do see on the other side of that traders are going, we probably dug as deep as we're going to get. Pretty decent chance for a rebound tomorrow. I'm going to take profits on some of these puts. And that's what we see, especially the stuff that's at the money, right? 22s, 22.5. We see those coming off the board. Max pain 23, next week moved down to 24, but March 28, still at 25. April 17, so April OPEX moved down to 23. So option stuff still kind of in this range, but it doesn't say, we're just going to keep drilling necessarily. At least that's not prefigured in the options data. If we do get a bearish day today, if SPY decides, it's going to drill more for whatever reason, there are some traders who have positions set up to kind of take advantage of that. It's not a crazy amount. I would not see us really moving past kind of the lower kind of 21 area. Really maximal extension to the downside is kind of that 2050. We just don't have options really in position there. Dealers aren't hedging anything down in that area. There aren't options contracts to hedge in that area. We do have some at 20, but that also corresponds to a technical level, the 100-week simple moving average. We could, right? I want to make sure I point that out. If we do get that kind of contextual, if we break, for example, the 550 level over in SPY, we could see a rundown into that area again, back to yesterday's lows. I don't think we open that way based on what it looks like we're seeing in the pre-market now. And another thing, right, if we look above us, we see, okay, this very stable, right, these were put dominant positions, 2250, 23, 2350. This is all heavily moved in favor of calls. I mean, they're not, again, crazy large positions, but they're now call dominant positions directly above us. And we're looking to open pretty close to that 2250 mark. So if we get kind of a stable day in SPY, we could move, slow kind of grindiness in these lower strikes. If we do get a stronger recovery in SPY, I think maybe we see some movement up into 2350, 24. Slow, stable, might encourage, right? This type of call dominant area can encourage options trading because it doesn't forecast quick, volatile, sort of the bottom falling out of things. Obviously, need to be aware of what's happening over in SPY. That's going to have an effect on what goes on. But again, if we get stable or even bullish recovery in SPY, that's going to lend itself to this type of bullish recovery scenario here. Again, don't think things move past 25. Like even in the craziest of bullish days, I don't see us moving past 25. I don't see market makers allowing all of these $25 calls to close in the money. There's a lot at 24 as well. 2350 is decent. So I would incline to see a finish maybe between 23, 2350 seems likely. Seems likely to me, possibly lower, possibly, like 2298, something in this range. We could run up a little higher if we get that strong bullish scenario in SPY, but close somewhere around here in the 23 area, where max pain is. So we also saw IV kind of recover. We had that weird IV dynamic. Things sunk on Wednesday and Thursday, despite the fact that despite the fact that we've seen IV kind of go up steadily every day as we approach earnings. I suspect that has something in large part to do with the fact that we don't actually have the date confirmed by the company yet. So still looking to see that. Yeah, so we've got a lot to watch today. We'll spend some more time, basically. We'll spend some more time today thinking about at the live stream, thinking about maybe what we can expect. Think about some more about some of these swap details going into the end of the month. But yeah, we'll do that. We'll take a look at the PSA app. We'll sort of reflect on what ends up going down today, and yeah, get ready for the second half of March. Continue to look forward to earnings, and then see where we go from there. So looking forward to seeing everybody at the live stream tonight, 4 p.m. Eastern time. Expect a reminder. I'll have a post up on X and on YouTube in that respect. So thanks very much as always for watching and listening. Looking forward to seeing you all later today. Good luck out there, and yeah, let's go GME. So we'll see you guys later.